Hey, what's up everybody? My name is Ryan. I'm a CPA and today I wanted to talk about the new bill that just passed the Senate. And so remember, it's passed the House and the Senate. It's called the Inflation Reduction Act. It has not been passed into law yet because obviously the president still has to sign it. So although it will very likely be passed into law, there still could be some changes that need to be sent back and go through the whole process again. But here we go. We're going to talk about this bill before it gets passed into law because I've been seeing so much bullshit being passed online that I am just irrationally angry about it. And I just wanted to dispel some of those myths and kind of talk about the tax portion of the bill and just kind of give you a little more clarity on what's going on in this bill. So I'll start with the bullshit. So I saw this posted on Facebook. Someone in my network posted this, and I'll show you a screenshot right now. You know, basically a job description of a job from the IRS, and as you can see, one of the description pieces is to carry a firearm and be willing to use deadly force if necessary. Now, you know, that's all fine and good, but this person also posted, you know, this text with the picture. Here's the job description for the additional 87,000 IRS agents. Must carry a firearm and use deadly force if necessary. Who are they planning on using deadly force against? Under what circumstances would deadly force be justified in the collection of taxes? And you know, they go and add sensationalized shit like taxation is theft and the IRS is just an extension of the mafia. That is the federal government, and how this should scare the hell out of every single US citizen. Thanks for posting this, and also thanks for not doing any research or looking into it any further at all. But using this as a way to spread your agenda or your narrative that you believe, and you know, it's just dangerous, and I get irrationally angry when people do this stupid shit. So here, let's dispel this myth. In the bill, there's no text that says the IRS is going to hire 87,000 IRS agents. There's no text that states that in the bill. The number 87,000 comes from a letter or a notice that was issued back a while ago by the IRS and by the president, saying, oh, we estimate that we need to hire this many people by 2031 in order for the IRS to operate efficiently. So that's where that number came from. You know, it's not a text in the bill or anything like that. The job description that you saw there is for a job for the criminal investigation department in the IRS. So yes, the IRS has a criminal investigation division where their purpose is to investigate crimes related to finance and tax evasion, tax fraud. And this division has the authority to arrest people. It has the authority to enforce the tax laws or the laws. So it is like the law enforcement division of the IRS. And yes, these people do carry handguns or weapons. So there's about 2,000 of these specific agents in the entire country. So, you know, we're not being overran by armed IRS agents. You know what I mean? There's about 2,000 of these sworn agents in the IRS division, in this specific division. Your average revenue officer that's going to tell you and help tell you how much taxes you owe, or that might come to your business and tell you that you need to pay your taxes or get on a payment plan, these people will not carry firearms, you know, and to think that they will is sort of ridiculous. The typical agent that helps, you know, facilitate audits on tax returns will not carry firearms. Your call center agents that answer the phone, the janitor, all those people will not be carrying firearms. The other myth is that the IRS is hiring 87,000 agents specifically to crack down on tax enforcement and to force people to pay and to audit and all that stuff, and that's just simply not true. There has been no allocation of how these 87,000 employees are going to be hired and what their duties will be. Okay, as I mentioned before, the number 87,000 just came from a notice that was issued earlier, separate from this bill, that is meant to, you know, bring the IRS up to operationally efficiency again. You know, since the IRS has been operationally inefficient since the pandemic. I mean, in my opinion, it's always been operationally inefficient, but that's a whole nother story. But, you know, we have to account for IRS employees that are going to leave in the next 10 years, which they estimate about 50,000 employees are going to leave the IRS in the next 10 years. And if you've tried calling the IRS lately, it's been nearly impossible to get through to them because of the lack of employees. So a lot of employees will be hired to kind of beef up the phone answering aspect of the IRS, which would be super helpful for us too, because it's been nearly impossible for professionals to get through to the IRS. Also, obviously, there is a delay that you see lately in processing of refunds, tax refunds, and a delay of processing paper filed returns, which we need more IRS people to be able to process those in a more timely manner. So generally, the funding the IRS is receiving from this bill will hopefully just help better its efficiency in operating as an entity. All right, now that I got that out of the way, there's this other myth that states that this new bill will be collecting taxes on the middle class, and nowhere in the bill did I see that. I just see the biggest change in tax collection I see is in the corporation taxes, the C corporation taxes. Well, as you know, right now C corporations pay a tax rate of 21% on taxable income. Well, this bill is imposing a minimum 15% tax on book income. And why this is significant is because usually the book income can vary significantly from tax income. And this is because of the differences between the tax code and tax laws and generally accepted accounting principles, which are principles that US companies have to use if they're publicly traded and they have to report income to their investors. There's this differences in rules and laws, and so companies obviously will try to take advantage of both to report high income to investors, to make sure their stock prices are good, to make sure investors are confident in their company, while also reporting as little income as possible to the IRS to pay as little taxes as possible. So now this bill is trying to enforce more taxation on the stated book income that's reported to investors to try to collect more revenue that way. There will also be a 1% excise tax on stock buyback. So when a public company or when a C corporation issues stock out to the public, usually it can buy back some of the shares or a lot of the shares to kind of create this scarcity environment for a stock and hopefully increase the share prices. Well, in this bill, as it's currently written, there is a proposal to incur a 1% excise tax on all shares that are purchased back by the company from the public. So this is just another stream of revenue. The tax will be imposed on the market value of the stock when it's purchased back. So again, another significant change for corporate taxes. All right, so let's talk about tax enforcement. You see this around the news a lot, around probably social media. They're going to crack down on audits. They're going to collect all the taxes from the middle class, all that stuff. Well, the primary goal of the tax enforcement, for the funding for the IRS, is to focus on taxes that are already owed to the IRS. You own a business, you haven't paid your taxes, you file your taxes, so now you owe taxes. And the point here is to try to collect the taxes that are already owed. Whereby by doing that, maybe having more revenue officers available, or by better collection methods. Tax enforcement also comes in ways of audits and making sure people are reporting expenses properly, not overstating expenses, not underreporting income, that kind of thing. And that might sound like a huge grab towards the middle class, and I guess indirectly it could be, but really if you're working with a tax professional, a good one, or you're not trying to cheat on your taxes and you're doing things properly, you really don't have anything to worry about. Now I understand sometimes the IRS agents, they're people too. They are usually incorrect in their audits. They have their opinions. Sometimes they don't even follow the tax code, which really sucks and is really frustrating. And that's why you should have a professional on your side to point these things out if you were to ever get audited, to make sure the taxpayer and the IRS agents both stay in line of the tax code. The next big tax change for individuals and businesses are the energy efficient tax incentives. So this bill will expand and extend the current incentives for renewable energy, things such as like electric vehicles, solar panels, all that crap. There's going to be a greater incentive to invest in electric or renewable energy stuff. Okay, so for most U.S. citizens, that would affect you if you purchase solar panels for your house. The tax credit has increased from 25%, I believe, to 30%, which is just a larger tax credit for buying solar panels. And then if you are interested in buying electric vehicles, I believe the tax credit will just be extended for a longer period of time, and it might actually reintroduce credits for car makers like Tesla, who have actually completely wiped out its ability to qualify for tax credits because of the amount of units that they've sold. Keep an eye on that. That's another big change that will be affecting taxpayers, hopefully in a positive way. But there's also incentives for businesses to upgrade to energy efficient things in their building, or to manufacturing or researching in energy efficient stuff, nuclear power, wind power, all that stuff. There are those incentives as well. And then the last thing I want to talk about are the Obamacare stuff. As you know, if you purchase your health insurance through the marketplace and you earn under a certain amount of income, then you're going to get a little bit of subsidies from the federal government to pay for your health insurance. Well, these subsidies, called the premium tax credit, will be extended through 2025 if this bill passes, and will further help people try to get as affordable of healthcare as possible, as long as their income falls below a certain threshold. So yeah, that's just the other major thing. And now I know this bill has a lot of touches on prescription drugs and renewable energy, like more specific things on renewable energy. I'm just not going to cover that in this video because as you know, we're just a tax channel. I don't want to get too much into other stuff, but if you want to hear about that stuff, let me know in the comments. Obviously I can read through the bill more, but don't want to dedicate too much time into it yet because, as I said, the bill has not passed into law yet. So we just got to wait and see. That's all I got for today. If you're new here, please hit that subscribe button. I'd really appreciate that. And if you found this video helpful, please hit the like button. And, as I said before, the bill is not passed. Be very wary of what you see on the internet, on social media. Please don't go blindly sharing stuff that could be, damaging or spreading misinformation. You have the right to, sure, but please don't do it because it just, why? Why would you want to just intentionally spread misinformation? So that's all I got. Take it for now and stay safe.
Move for a switch up. I hit the function, hit the rose till I hiccup. I hit the stage and leave with money that's a sticker. She picture perfect, so I told him I'm a flicker. Bill, I'm in the mood for a change up. I leave the city and return with my change up.